When it comes to economic powerhouses in Europe, countries like Germany and France often steal the limelight. But in the shadows, a hidden gem has been quietly making strides towards economic greatness: Romania. Over the past few decades, Romania has transformed from a struggling post-communist state into an economic force to be reckoned with. In this video, we'll explore the factors that are propelling Romania's ascent and why it might just become the greatest economy in Europe. Romania's history can be traced back to the Dacian Kingdom, a complex and advanced society that thrived in the region before Roman conquest in the early 2nd century AD. The Romans left a lasting imprint on the culture, language, and heritage of the area, which eventually led to the formation of modern Romania. In the 19th century, the Principality of Moldavia and Wallachia, along with Transylvania, united to form the basis of modern Romania. The newly created state gained recognition at the Paris Peace Conference in 1856 and later achieved full independence from the Ottoman Empire in 1878. Romania experienced a tumultuous 20th century from its involvement in World War I to the interwar period, followed by the horrors of World War II. The country also grappled with a communist regime under Nicolae Ceausescu, which lasted from 1965 until the Romanian Revolution in 1989. This era left Romania economically strained and politically isolated. After the fall of the Ceausescu regime, Romania embarked on a challenging journey towards democracy and market-based economic reforms. The transition from a centrally planned economy to a market-oriented one was difficult, resulting in an initial period of economic turmoil and hardship for the population. Romania's economy is set to outpace its stagnating neighbors this year, helped by European Union funding, currency stability, and foreign investment driven in part by reshoring from Russia and Ukraine. The International Monetary Fund expects a 3.1 expansion, while even the European Commission's 1.8 growth forecast would place it well ahead of Poland, seen growing 0.7%, and Hungary grappling with a slowdown and sky-high inflation. That follows a decade in which Romania, long one of Europe's poorest countries and burdened with a reputation for corruption, has quietly closed in on its peers to become Eastern Europe's second largest economy after Poland. According to the most recent figures from Eurostat, GDP per capita expressed in terms of purchasing power was 74% of the UE average in 2021, a 21 percentage point gain since 2010. In 2007, Romania achieved a significant milestone by becoming a member of the European Union. This marked a turning point in the country's history, offering access to UE funds, trade opportunities, and a stable regulatory framework. Membership in the UE provided a platform for further economic development. In recent years, the automotive industry also has been one of the most profitable sectors of the Romanian economy. Although there are several notable domestic manufacturers such as Automobile Dacia, Roman Brasov, and Igero, much of Romania's manufacturing industry is made up of foreign branch units. Branch plants primarily employ blue-collar workers, with research and executive posts confined to other countries. The cars produced in Romania are not just for the domestic market. The country has become a significant exporter of vehicles primarily to other European countries. The automotive sector contributes significantly to Romania's economy and export earnings. Romania has a greater potential for growth in the car manufacturing industry than other Central and Eastern European countries. Romania's accession to the European Union in 2007 marked a significant turning point in the nation's history. Becoming a member of the EU meant Romania could access a vast and affluent market. The EU is one of the world's largest trading blocs, comprising 27 member states. Romania's goods and services now had a larger customer base and broader opportunities for trade. UE membership ushered in the elimination of tariffs and trade barriers. Romanian exporters found it easier to sell their products in the other UE countries. This free trade environment promoted economic growth and made Romanian goods more competitive on the international stage. The EU offers financial support to its members states, and Romania has benefited from substantial investments in infrastructure and development projects. Improved roads, ports, and logistics networks have facilitated the movement of goods within and outside the country. Romania's exports to other EU countries experienced significant growth. The EU's single market created an environment where Romanian businesses could expand their reach, resulting in a surge in exports across various industries. To align with EU standards, Romanian products had to meet strict quality and safety requirements. This process encouraged domestic industries to enhance their products and services, resulting in higher quality offerings for both local and international markets. Romania's accession to the EU has also brought benefits to its consumers. Greater competition and access to a wider range of products and services have led to improved choices and often lower prices. EU membership also attracted foreign investors looking for strategic locations within the EU. This influx of foreign direct investment, or FDI, has created jobs, boosted economic development, and enhanced Romania's production capacity. Foreign direct investments in Romania rose to 10.7 billion euros in 2022 from 8 billion euros in the previous year, central bank data showed Monday. Romania boasts a high-skilled and competitive labor force, offering a cost-effective solution for foreign companies. With a strong educational system and a multilingual workforce, Romania has become an ideal location for various industries, including information technology, customer service, and manufacturing. In 2022, the most significant amount of foreign direct investments came from the Netherlands, totaling nearly 20 billion euros. It was followed by Austria and Germany, which had an FDI stock in Romania worth over 10 billion euros each. In the same year, Romania's FDI stock amounted to 90.7 billion euros, representing the highest investment value over the last 10 years. General Motors could shortly begin investments in order to develop a production center in Romania, with Cluj-Napoca as a potential location for the future plant, close to the Nokia village. Nokia invested $110 million in a plant near Cluj-Napoca. Sab Miller is said to invest 50 million euros in expanding production at one of its breweries in Romania. Czech-based investor and developer CTP Invest plans to allocate 60 million euros next year in industrial property development in Romania. Snowmobile and motorcycle maker Polaris will invest 50 million euros in a snowmobile plant in Romania as well. Situated at the crossroads of Europe, Romania's strategic location provides a gateway to both Western and Eastern European markets. This advantageous position has made Romania a logistical hub for business seeking to expand their operations within the EU and beyond. The Romanian government has introduced a range of measures to attract foreign investments. These include tax incentives, grants, and support for research and development projects. Additionally, the government has been proactive in cutting red tape and improving the ease of doing business. In 2019, foreign direct investments contributed to the creation of more than 4,000 workplaces in Romania, with nearly half of them being in the digital sector. Moreover, the total number of employees working in FDI enterprises peaked in 2018 at 1,316,000 people and slightly dropped to 1,265 by 2020. This contributed to an increased labor profitability in Romania, culminating in 2020 at 5,402 euros per employee. Romania's government is also busy getting ready to launch its new Agency for Investment and Foreign Trade. The new agency, which will report into the Prime Minister's office, will incorporate the country's existing agency Invest Romania, which is part of the Ministry of Entrepreneurship and Tourism. Foreign investors have shown a keen interest in Romania's real estate and infrastructure development. The growth of modern shopping centers, office spaces, and residential complexes has attracted significant capital, contributing to urban development. Romania's economic stability and consistent growth have piqued the interest of foreign investors. The country's growing consumer market, low inflation rates, and overall positive economic outlook provide a fertile ground for investments. Over the past 2 decades, Romania has experienced substantial economic growth. The country's diversified economy, which includes sectors like IT and technology, agriculture, manufacturing, and tourism, has played a pivotal role in its development. Competitive labor costs have attracted foreign investments, and a burgeoning startup ecosystem has fostered innovation. While Romania may not be the first European nation that comes to mind when discussing economic powerhouses, its transformation over the years is nothing short of astonishing. With steady economic growth, a burgeoning tech industry, agricultural prosperity, and strategic positioning within the EU, Romania is silently ascending the ranks. As Romania continues to foster innovation, attract foreign investments, and develop its infrastructure, it's likely to become one of Europe's greatest success stories. Keep an eye on this hidden gem, for it may well hold the key to Europe's economic renaissance in the coming years to come. Make sure to let us know your thoughts down below. Subscribe to the channel as a sacrifice to the gods of the algorithm. Thanks for watching, and we'll see you next time.